Hey everyone, welcome to another YouTube video. I'm Rise from the Theta Daddies, the #1 financial education Discord community on the planet. That's a mouthful, but you know it. Today we're going to be talking about one of the most requested topics that I've seen around, using indicators in stock charting to make decisions on whether to enter or exit a position or maybe just do nothing. So I'm going to assume that you've already watched my TradingView indicator setup 101 video where you've already set up almost all of these indicators. There might be one or two that we look at that isn't currently in that video, but easy enough to set them up. If you've already learned how to do them, you'll be able to do these as well. And number two, if you happen to be using TradingView, which is what I'll be using today, I mentioned before in prior videos that I'm not sponsored by them. That's true, I'm still not. But I do have an affiliate link if you're interested in checking that out and supporting the channel. The link is going to be below. And if you're watching this in the Thanksgiving week, I have some really good news for you. They have a wild Black Friday sale going on all week. So make sure that if this is a tool that you use and find value in like I do and many other traders do, I highly recommend that you get it now while it's on a crazy 80% off sale. Personally, you'll see that I use TradingView Premium, which you can see up here in the top left. You see that it's premium. And again, I think it's the best trading tool that I own, and I expect to continue to pay for many years. And then if you're wondering if you already have a subscription, yes, you can still buy it again and extend it at 80% off. In fact, I just did that. And in doing it, it'll show that it's extending by, in my case, 252 days beyond my subscription that I currently have right now. But enough on that. We're going to assume that you have the tool and get right into things here. So I thought I would start off by looking at a few charts that are live right now. It is 11 o'clock in the morning, so there's already been plenty of action. And right now I've got Reddit open, which is a good starting point for us to look at because a lot has happened with Reddit. We're going to focus on the pretty recent time frame here and specifically using the daily time period in order to start our charting experience. So on the daily, you can see that we've been creating this like wedge-like formation. And typically to draw a wedge, all I do is I find some high points and some low points. And you'll see that when you connect the dots, literally connect the dots, there is a wedge forming. And usually when there's a wedge forming, we expect some sort of breakout. Now, it happened to happen today. I wasn't necessarily expecting it today, but I was expecting it in general. And because of that, I have many shares of Reddit that I decided not to sell options on this past week. I said, you know what? I'm just going to hang out for a bit and let it breathe a little bit. And in that case, it worked out quite well as we decided to almost test the top of the fib charts. Now, the Fibonacci's are a chart or a indicator that I'm going to talk about quite a lot, where you can use this on any time frame. And if you want to know how exactly they are set up, Google it. I'm not going to get into that here since we're just doing indicators 101, but I will tell you that it's very common that stocks trade within the Fibonacci fences, the lines that we call them. I use fences as a term very frequently, as that is a term that we use, have stolen from the Tao of Trading. They, I think, have a great analogy in that book that if you haven't read it, it's worth checking out just for learning about indicators and whatnot, where the Fibonacci's are essentially the stock likes to trade within these ranges, and when it hits these lines, as the Tao will call fences, it encounters resistance typically. And you'll see that often where we test and then we bounce back, or we test above and drop back. And it takes some momentum to really break through those fences and go into the next channel up or down. And there are different numerical values that are associated with the fibs that I don't think I can zoom in on here. I guess I could click on it and probably change it in settings. But typically, the golden fibs are going to be the 0.618 fib, and you'll see it on the other side of 1.618. So anyway, looking at Reddit today, there were some interesting things that I saw that, for one, we opened immediately higher off of some good news. We actually backtested briefly to the 21 EMA, which is interesting. It's interesting in that it's very typical and common that we test exact points. And you can see that's pretty close to like the penny on testing something. And then we went through this top fib, which is somewhere that we've existed before. And we didn't quite test off the top, but you can see that we have in the past. But we did go back to the middle of the range as we are right now in the middle of the day. Now, there's nothing saying that we can't break through this today. And in fact, that would be fantastic because that would put us back into new clear territory. But that is something that I look at of like, okay, maybe I want to consider selling an option in this 212 range, right? Or 215. You're going to want to look for the option value that has the most open interest, of course. So, 212 is what the fib is at, or 213. I guess it's 213 exactly. So you could sell the 213, or you could look at 210 and 215 and choose an area over there. Now, with everything that we do in charting, I would say, even though we can typically test to the penny, and that happens more often than you would assume, usually you want to think of things in terms of ranges. So like a zone. And this line, while this line is infinitesimally thin, you might use a $3 zone top or bottom above it as a indicator buffer, right, of where we might fall within that. So that's just an example of how I've used things with Reddit. So welcome to our next example, which is Archer. And Archer is a electronic vertical takeoff and lift stock company that I have found interesting over the last year now to follow. And here I'm going to show you just a way that I sometimes choose a support level of, imagine you like this stock and you said, hey, I'm interested in selling cash secured puts to get into the stock. Now, if you were thinking about that in the last week or two, you might have thought like, hey, we're at recent lows that we want to consider, oh, look at this. Maybe we want to get in at 750 or something like that. What's interesting, though, is sometimes if you zoom out, you can find that there are these common points that the stock touches, again, basically to the penny. And when you look at this, maybe this line is not a line, but a zone, and you can move this up a little bit here to make it feel like it's generally in the area of where we've tested multiple times in the past. I'm excluding April, by the way, because April was a macroeconomic driven event. So sometimes there are going to be times where you just say, hey, that one didn't count. We're just going to ignore it. It's a one-off data point that doesn't really hold a lot of value for what we're looking at. But it's interesting to see that Archer tested this exact point of about 650, right? Pretty close to 650, 660, whatever. And we bounced off it way back here in March again. And while we've got this big drop recently, along with a lot of other growth stocks that have done the same thing, look at where we tested again. Right exactly to that same 660 line, 655, whatever, again, whatever it was exactly. Not too relevant. So you could say that, oh, maybe this is a good point to get in. Now, the interesting thing about Archer is in recent past, it has done the same at the top. It is really struggling to break through a resistance point. Now, I have had this for a little while on my chart, so you can ignore the terrible jokes, but we consistently get stopped at 1350 or so. And even though we've gone even higher, testing a fib up here, by the way, we stop consistently at the same exact point. And now we've tested it 4 separate times, 5 really, if you think about it, 5 or 6, before we dropped all the way down, which is a ridiculous drop, I'll have you know. This is a 50% drop in no time. By the way, I'm not suggesting you invest in this stock or anything like that, just using it as examples. And you can look at this and say like, wow, okay, so this could be a really good point to get back in. And if we extend things out, right, and really look at this over a long period of time, it might be, it may not be out of this world for it to once again test and maybe break through this time. We don't know, but maybe it will test at a similar angle as it has in the past. So if I just like pick from a bottom point over here and draw my best guess at what a trend line might look like, which there's probably tools that are better to do this, but we're just using some simple ones. You could basically draw this here again and say like from this bottom point, and maybe even we want to use to test the bottom test point here, you could assume that by February, we could be all the way back up to where we were. Now, you can also look from tip to tip here, which sounds terrible, but we went from July and retested again in October. So real simply, July, August, September, October was a 3-month time frame. And from here, you can see that November, December, January, February puts us once again at pretty much a 3-month time period. It's very interesting how this all seems to work magically, right? And I'll say what I've said many times on TA. TA does not predict anything. All we're looking to do is observe human behavior in the form of data in a stock chart and how people react to it, creating supply and demand, to maybe get some insights to how it might move in the future. But what is very interesting, you'll find as you do this longer and longer, it seems to work. It seems that you can often pick an exact value at what something might test. Now, I'll give you an example where that doesn't always work, and that will be GT. So GT is an interesting one where I put this line way back when I was looking at, hey, where have we tested off in the past? Oh, wow, we've tested this exact point multiple times. So I use that as my entry point for leaps. Now, it is important to remember that you still need to do fundamental analysis, due diligence, listen to earnings calls, hear what the CEO and the leadership is talking about. But what I decided to do here was enter leaps right about here. And unfortunately for me, in this case, we broke through that support line, which can happen. We know that can happen. And we had a new bottom formed, which was not that much further down. Like percentage-wise, it was a pretty decent percent going from 730 to 650 at the bottom, right? Okay, 80 cents on 730. I can't do the math right now. Okay, I did the math. It's about 11%. I forgot I can edit. But when you look at that, you can see that, okay, that drop was painful. But when you buy leaps, I'm out for a year. I'm locked in for quite some time. So then I started looking at this and saying, okay, I feel pretty good about it. We had earnings coming up. Earnings was actually pretty decent. We had a nice run up to earnings, dropped right before earnings. So run up and kind of cooled off before we got the news. And then we had this like bull pennant form. Again, this is stock patterns that we'll probably talk about in another video because there's just so much to talk about here. And my thought was like, hey, this looks great. And I decided that, hey, I'm also going to draw a trend line again off of the initial trend and just see what happens. Sometimes I draw stuff and then I just observe. But look what happened. This initial trend line, which we're going to look at another chart that does the same exact thing, we have followed it. Now we have moved a little bit. We've got a meandering path as we get there, and we have all these new formations and patterns and stuff involved in it. But what's really interesting is we're back to it. And then if you look at what's happening today, we tested a fib almost to the penny. Again, I'm zooming in real close. And we're testing the 100 SMA. So these are resistance points that while we've broken through some areas of resistance, we're now looking for support so that we can get a new low and a new high going forward. Now, another thing that you can do here is you can look at the weekly chart and see similar issues arise. We're following the trend more clearly on the weekly, which is also of interest. And you can see that we might test weekly patterns here as well. And again, the fibs change on the weeklies, the SMAs change on the weeklies. So everything based on the period that you're looking at changes the indicator. Every single indicator has the same reaction. Down here, you'll see that I have RSIs, and right now we're in 2-period RSI oversold, but we're not oversold on the weekly 14-period RSI. I like to use those as well to get an indicator of, are we overbought or oversold? I should say that overbought is actually the term here. And we look like we're actually in still pretty good shape. And you can see how this changes if we go to the daily. It's very similar on the 2-period that we're overbought. Now, the 14-period is also starting to look like on the daily that we're overbought. However, again, on the weekly, it's not. So you need to use all these different time frames to kind of take in the information and make a best educated decision. So for me, on this particular stock, I'm holding on to my leaps. I really like what I'm seeing here. I really like the higher high, higher low, higher high, higher low, higher high. This is a good trend. Momentum has moved. And the other thing that I really like about this particular stock, again, not financial advice, not suggesting anyone buy it, but look at what's happening with our EMAs. Our EMAs went from a very bearish stack where we were a backwards rainbow completely to now we're flipping everything over. The ribbons are crossing back over themselves. And we've got the 8 EMA has crossed over all of the other EMAs and now has made it past the 50 SMA and is working on passing the 100 SMA. Now, we're still pretty far off from things like a golden cross, which will be a really bullish signal. But this is a real good sign that we might be getting to that territory. And if we do, man, I might hold on to this leap well beyond my leap target, because there's an expiration here, and that line is conveniently placed at a point of resistance. So this is both a line that shows when my leap expires here in January of 2027, so plenty of time. And maybe this line should actually be extended all the way up to here. Now, I think I messed up my angle here a little bit. Something like this looks good. And if you like catching my live streams, you can see me talk about this on a weekly basis every single week. We'll always go back and look at this chart, and we'll see if we're right or not. Now, that is a great transition into another favorite stock of mine. Again, not suggesting anyone buy this. Lilly. Now, this is a crazy, crazy chart for many reasons. For one, the stock has been on an absolute tear. And for those of you who are in the Discord, you know that we all bought here at 620, and what a fantastic purchase that was. Actually, I bought both at 650 and 620, and my only regret was I bought Lilly X, which was good, which was amazing. We made 50% on it, but it would have been nice if I had bought instead leaps for annual leaps here instead of Lilly X, because holy cow, those contracts would be up 1,000%, I think. I'd have to do the math. It's a lot. Regardless, what's interesting about this chart is not because of the success that we've had, although it is very successful. There is a typical view that I've had of Lilly for quite some time that, hey, anytime that we drop below 720, I like to buy it. And you can see why. Here's 724. Let's change this real quickly to 720. Perfect. And you can see that this has been a consistent point of support for a long time. In fact, well into last year. In fact, this can go back even further into March of 2024. A ton of time. Now, if you keep going back, obviously it does break down eventually, and you have to pick a time frame that you're interested in looking at support at. And we exclude April, as always. That was kind of a wild time in our timeline. You can move this down if you want to 700, right? This is a point where we've tested quite a few times around 700. Anyway, anytime that Lilly dropped below 720, I sold options at 700. And then if ideally I was assigned shares, which happened on occasion here, maybe I sold it at 710, something like that. Then you just wait to 800 and you just kind of bounce back and forth historically, if not higher. Here, this was such an overblown reaction to news on GLP-1 pill format success that I thought, well, you know, this is a good time for me to get in. And again, I wish that I like full ported here in hindsight, of course. But look at this. We were able to draw a trend line in this run up. And what happened? Well, we had a target originally of $15 on Lilly X. And the reason for that was equating to 800, which you just heard me talk about is a point where I like to bounce back and forth between Lilly. So I won't say that this was a guarantee by any stretch of the imagination. It wasn't. But it felt like a good spot where I could reliably sell at 15 and make 50% because I bought Lilly X at $10 down here. We can look at that chart separately, but it's the same chart. So I'd rather look at the underlying. Now, what's interesting here is this trend line. Look what happens. We follow this trend line repeatedly all the way up to where we are now. And I'm sure there'll be a pullback here, some just reversion to the mean, and we retest some of the fibs again. But this has gone parabolic, for one. But two, it's still following the line that we drew back here. That's crazy. And it's also blowing through fibs pretty regularly on the way up. So huge momentum. And now you can see that we are in huge overbought territory. Now let's look at the weekly and we'll see that we are also on the weekly overbought and getting really close to overbought on the weekly 14 period RSI. So all those things combined tell me like, okay, this is a fantastic stock. I love it. It may continue to run to, I don't know, 1,300. Who knows? But for me, I'm not going to enter at this point because it is in overbought territory. It's way above all the fibs, despite the fact that the EMAs are stacked very nicely and may continue to run quite a bit. It also feels like it's probably going to correct at some point, like it typically does. We've made higher highs. At some point here, we're going to make a higher low, which is good, right? Because that just creates a new point of support, and then we can continue to hopefully go up from there. Will I get in on this at that point? Probably not, to be honest, because we're at all-time highs again in a very volatile environment. But I do think it's an interesting stock to consider based on the indicators. Okay, so I've got one more example for today, and then we're going to have to wrap up this video because I feel like I could go forever on this topic looking at indicators. And this is Meta. Meta is a really interesting one where we had this huge fall from grace after earnings, after there was an EPS miss, and also they talked about some investments that they were making, and for whatever reason, the stock just tumbled. And you can see that's a big red weekly bar. But what did we do? Well, immediately, I was looking at, okay, gaps. Now, let's look at the daily, because this is where the gaps really existed on the chart. We had a gap down to 600, and that felt like it could be a potential area of support. However, there's another gap all the way down to 550. So what I decided to do personally was I bought some shares around this 600 point. Now, I'm not personally looking to ever pick the exact bottom or sell at the exact top. If you can do that, well, you're probably the best investor of all time. I like to be directionally correct and ideally pretty close. And in this case, I feel like I was pretty close buying in at this 600 area where I said, okay, if we fill this gap, there's a good chance that things rebound from there. So I did. I bought right around 600. And sure, the stock continued to drop to 580. And that never feels good, of course, during that time period. But I will say, look, we're bouncing back. Now, will we continue to go back up and flip this chart bullish again? I don't know. But all of a sudden, we do have some indicators that, number one, we're well below the fibs that we were playing in before. And you can redraw these so that you have new fibs. But for now, we're just going to look at instead, well, the information we have on screen, which is we have turned bullish on the 80 MA, on the daily. Not huge, not a huge indicator. But we are also starting to recurl up here, potentially, on the 21 EMA. And that gives me a little bit more confidence. We are oversold, or overbought, I should say, on the RSI. But look what happened prior to that. In this big drop, we were oversold, both on the daily RSI 2, and you can see the little highlight of red here, also on the RSI 14 period. And those are you can choose different periods, by the way. Those are the two that I like to use that give you a short-term view and a long-term view. You can think of them as average data over time. And you can see that it's basically the same formation, except not quite as volatile, obviously, when you're out on the 14 period. And also looking at the squeeze mom indicator, which is a momentum indicator, we're still red, but we're maybe pulling out of it. Now, if you go back in time, you can see there are times where you go red and it looks like you're coming out, but then you stay red for a little bit longer. So none of this means or is a guarantee that something is going to happen. It is just a continued data point of, you know what, if we start getting some good news here, I might feel like, yes, this will continue. If the catalysts keep coming, the positive catalysts line up with your TA, now you've got some really strong positions to consider. So again, looking at this chart here, this line of support, that is all it is drawing down to a gap, a prior gap on the daily. I feel pretty good about it. And gaps don't have to be filled, but when they are, that could be a point of turning the tide because the liquidity grab has been completed and now the chart could take back off. We don't know for sure, but that's how I feel. Also, another good thing to look at is volume. As volume increases with that change, that is generally a sign that interest and sentiment is improving and maybe more people are getting in here right now. Okay, I lied. I got one more chart I'm going to look at, and that is Hood, a favorite of many people on After Hour, and I know Longwist here loves this stock and probably has way too much money in it, but we, like every other growth stock, had a big drop here in the last month. So in this drop, we had an interesting thing happen. Once again, we are testing off this zone. Maybe it's better that we draw like a rectangle here where the zone is something like this, right? Where you've got a line in the middle, and again, plus or minus a little bit is where you're going to see the zone offer support or resistance. And I would say this is probably a fair estimate. Yes, we still went even below that intraday, whatever. But it's, again, very fascinating that this area that we continue to bounce off, this basically $100 stock zone, is something that the stock seems to like to test. And once we touch it, boom, we bounce right off it, and we're up 10% in a couple of days, right? So you can use that. You can start seeing how day traders, which I'm not suggesting you do, by the way, that is a wild west of trading style and approach that is hard to be good at. But you can use this on any trading time scale, whether it's the hour, the minute, or the daily or the weekly. And we can see that even if we look at an equity, you can do this on an equity like SPY as an example, where on the daily, look at that, we tested exactly to the 100 SMA this week. Wild that it touched exactly to that. What might that mean? Well, that might mean that not just you and I are looking at this, market makers are looking at this. We tested here exactly to the 34. It's amazing how often that happens. And you can look at this again on the weekly and see that, wow, there are times where we test pretty close to exact on the weekly as well with those candles. Also, the weekly fibs get tested in both directions. So that's it for Indicators 101 on how you can start looking at these things to inform your decisions and maybe pick better entries and exits. I do think it's always a good idea to at least check out the chart before you jump in and make a decision. Because when you look at the chart, you might go like, oh, okay, wait a second. There's a huge resistance line here. So maybe that's a point that I'd love to limit sell at or limit buy at, and those decisions can help you be a little bit more profitable and give you a little edge over yourself, but others potentially as well. And maybe you can use these to stop making emotional decisions like, oh no, panic selling Meta because it hit 600 and liquidating your position, only to find that we're already heading back up potentially. So hopefully you enjoyed that video. And again, if you made it to the end, leave a comment. Let me know. I'm curious how many people watch this stuff to the end. Raise your hand emoji if you got nothing interesting to say. I'd certainly appreciate that. Certainly like, subscribe, all that stuff. We'd love to have you. And if you don't have TradingView already and you're thinking about getting it, again, consider using our affiliate link to support the channel. That would mean the world to me. And we'll see you in the next video. Goodbye.